Welcome to our channel. Today, we're diving into the world of investing with none other than the Oracle of Omaha himself, Warren Buffett. Known for his plain-spoken wisdom and uncanny ability to pick winners, Buffett has earned a reputation as one of the most successful investors on the planet. His investment philosophy, rooted in value investing and long-term ownership, has guided countless investors to financial success. And today, we're going to distill some of that wisdom for you. Stay tuned as we explore the 9 best Warren Buffett advice for investing your money. First on Buffett's list is investing in yourself. You may wonder, what does that even mean? Well, it's quite simple yet profound. It's about prioritizing personal growth, learning, and self-improvement. It's about dedicating time, energy, and sometimes even money to cultivate valuable skills. Acquire knowledge and gain experiences that can enrich your life. Think about it. You are your most valuable asset. The skills you possess, the knowledge you hold, and the experiences you gather, they all contribute to your unique value proposition. They can open doors to opportunities, boost your earning potential, and provide you with a better understanding of the world around you. Investing in yourself can take many forms. It could be taking a course to learn a new skill, reading a book to broaden your understanding, or even pursuing a hobby that fuels your passion. It's about becoming the best version of yourself, not just for financial gain, but for personal fulfillment and satisfaction as well. Remember, the knowledge and skills you acquire can never be taken away from you. They are assets that can yield dividends throughout your life. As Buffett says, the best investment you can make is an investment in yourself. Buffett's second piece of advice is to be fearful when others are greedy. This advice is rooted in the understanding of market psychology and the perilous herd mentality that can often engulf investors. Picture this. When the market is booming and everyone is scrambling to buy, prices surge. This is the time when greed is at its peak. But what happens when the bubble bursts? Those who bought at the peak, driven by greed, are left to nurse their losses. On the flip side, when the market is down and others are selling in fear, prices drop. This is when fear is in the air. But for the discerning investor, this could be the perfect time to buy, as they can get quality stocks at discounted prices. Buffett's advice is a reminder to not get swept away by the emotions of the crowd. It's about staying rational when others are being irrational. It's about being brave enough to go against the tide, but only after meticulous research and analysis. In simple terms, don't follow the crowd blindly. Do your own research and make informed decisions. Third on the list is, stay within your circle of competence. This sage advice is all about acknowledging that we all have a specific set of skills and knowledge, a circle, if you will, that we're really good at. In the world of investing, it's crucial to understand that you can't be a master of all trades. Just imagine a doctor trying to fix a car engine or a chef attempting to fly an airplane. Sure, they might have a basic understanding of how these things work, but would you trust them to do it well? Probably not. The same goes for investing. If you're good at understanding technology companies, then stick to investing in those. If you have a deep knowledge of the real estate market, then that's where your investments should focus. It's all about recognizing your strengths and limitations. Trying to venture outside your circle of competence in investing is like navigating an unfamiliar terrain without a map. You might get lucky and find your way, or you might end up lost. Warren Buffett himself is a great example of this principle. He sticks to what he knows best, and it has worked wonders for him. Remember, it's better to be an expert in one area than to be average in many. Buffett's fourth advice is understanding the Rule of 72. This rule is a simple method to estimate the time needed for an investment to double, given a fixed annual rate of interest. Here's how it works. You divide the number 72 by the annual rate of return. The result is approximately the number of years it will take for your investment to double. For instance, if you have an investment with an annual interest rate of 6%, you divide 72 by 6. The result, 12, is the number of years it will take for your investment to double. But remember, this is a rule of thumb, not a precise calculation. It's a quick way to get a rough estimation, and it becomes less accurate as the rates of return increase. Despite its limitations, the Rule of 72 is a fantastic tool to help you understand the potential of your investments. It's a way to visualize the magic of compound interest, where you earn interest not just on your initial investment, but also on the interest you've accumulated. In essence, The rule of 72 is a quick and easy way to calculate the power of compound interest. Moving on to the fifth and sixth advice, Buffett emphasizes on the importance of patience and adopting a long-term perspective. Now you might ask, why patience? Well, the answer is simple. Investments typically don't make you rich overnight. It's a game of persistence where you allow your investments to mature over time. Think of it as planting a seed and waiting for it to grow into a tree. It takes time, but the fruits it bears are worth the wait. And that brings us to the long-term perspective. It's easy to get caught up in the daily fluctuations of the stock market. But remember, investing isn't about making a quick buck. It's about financial growth over an extended period. Warren Buffett himself is a testament to this approach. His wealth accumulated over decades, not years. The key here is not to be swayed by short-term volatility. Stick to your investment plan, be patient, and keep your eyes on the horizon. In the end, it's the steady tortoise that wins the race, not the impulsive hare. Investing is a marathon, not a sprint. Patience and a long-term perspective are key. Finally, Buffett's last three pieces of advice are about diversification, the power of compounding, and owning a home. Let's unpack these one by one. First up, diversification. It's the strategy of spreading your money across different types of investments, like stocks, bonds, and real estate. Why? To manage risk. It's like not putting all your eggs in one basket. If one investment performs poorly, you're not left high and dry. Next, we have the power of compounding, often referred to as the eighth wonder of the world. This is where you earn interest on your interest, and that cycle continues, leading to exponential growth over time. It's like a snowball rolling down a hill, growing bigger and bigger. The secret here is time. The longer you leave your money invested, the more you can benefit from compounding. Lastly, Buffett advises owning a home. Homeownership isn't just about having a place to live. It's also a long-term investment. Over time, the value of your home can increase, providing you with a greater net worth. Plus, it's a tangible asset that you can use, unlike stocks or bonds. Remember, diversification is your friend. Compounding is the eighth wonder of the world, and there's no place like home. That concludes our exploration of Warren Buffett's top 9 advice for investing your money. We've journeyed through the importance of investing in ourselves, understanding the power of fear and greed in the market, and the rewards of staying within our circle of competence. We've delved into the magic of the rule of 72 and the significance of patience and a long-term perspective in investing. And we've discovered the benefits of diversification, the power of compounding, and the value of owning a home. These pearls of wisdom are not mere words, but proven strategies from one of the most successful investors of all time. They serve as invaluable tools to navigate the financial seas, helping us make smart decisions and grow our wealth. Remember, investing isn't just about money. It's about our future, our dreams, and our financial freedom. So, let's take these advice to heart and apply them in our investing journey. If you found this video useful, please leave a comment below. We'd love to hear your thoughts and what money topics you'd like us to cover next. Until then, happy investing.